What is going on, crypto fam? Welcome back to Bitcoin Bulletin, your #1 source for all things digital finance and the future of money. The market is moving at lightning speed, and if you're not plugged in, you're missing out. We've got a packed show today with updates that could shake up your portfolio and redefine the crypto landscape. From slowing ETF demand to inflation data hitting hard, and even a look at how long-term holders are cashing in, we're diving deep into the narratives that matter. Plus, we're shifting gears to a revolutionary approach to wealth preservation, championed by a key figure in the Bitcoin space. You do not want to miss this. Let's get right into it. First up is Bitcoin's epic run starting to cool off. We're seeing a slowdown in demand from key institutional players and corporate treasuries, and analysts are asking if this means more downside ahead or if a Q4 liquidity spark is on the horizon. This could be the signal you've been waiting for. Then, we're breaking down the latest inflation data and its impact on the crypto market. Bitcoin has slipped under a critical price point, and the numbers are telling a story about where we might be headed. What does this mean for your assets? We've got the details. Next, we're talking profits, but not just any profits. We're looking at the second most profitable cycle in Bitcoin's history, with long-term holders realizing massive gains. Is this a sign of a late-stage market or a prelude to an even bigger boom? The data is fascinating. And finally, we're shifting gears to a revolutionary approach to wealth preservation, championed by a key figure in the Bitcoin space. This isn't just about holding, it's about a whole new paradigm. Stick around for all these stories and more. Don't forget to smash that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. Market momentum shifts. Bitcoin's rally cools amidst ETF demand slowdown. Bitcoin's recent ascent to a new all-time high in July brought with it a significant surge in realized profits. However, a closer examination by market analysts suggests that this cycle's trajectory might be distinct from previous ones. Instead of the explosive, parabolic growth seen in earlier years, Bitcoin's price action in 2025 has been characterized by more measured, stepwise advancements. This evolution, according to analysts like Jamie Coutts, CMT, indicates a maturing market where growth is influenced by liquidity conditions and broader economic factors, rather than pure speculative fervor. Coutts points to a noticeable cooling in two of Bitcoin's most critical demand drivers: corporate treasury holdings and exchange-traded fund (ETF) inflows. While ETFs experienced a strong start to the year, their momentum has decelerated. Similarly, corporations are no longer accumulating Bitcoin reserves at the same accelerated pace as before. This potential softening of demand, Coutts warns, could expose Bitcoin to further price corrections in the short term. Without the robust influx of capital from institutional vehicles or corporate buyers, maintaining upward momentum may prove challenging until a new wave of liquidity enters the market. Looking ahead, Coutts identifies several macroeconomic catalysts that could significantly alter the market's landscape as the fourth quarter approaches. Potential interest rate cuts, adjustments to supplementary leverage ratio, SLR, rules, and policy decisions from China are all factors that could inject much-needed liquidity back into the financial system. Furthermore, the unpredictable nature of U.S. political developments, including what's being termed the Trump wildcard, could also serve as significant catalysts for market movement. Should these conditions materialize favorably, Bitcoin could very well reignite its upward trend following a period of consolidation. However, the current confluence of slowing demand and ongoing profit-taking suggests that the market might experience additional weakness before embarking on its next major upward leg. The overarching message from analysts is clear. This cycle is not a repeat of the euphoric peaks of 2017 or 2021. Instead, it reflects a more tempered growth pattern. While this maturation could be beneficial for long-term adoption, it currently presents investors with the challenge of navigating near-term volatility against the prospect of liquidity-driven rallies later in the year. Hold on tight because the market dynamics are shifting. Next, we'll dive into how inflation data is impacting Bitcoin's price and what it means for your investments. Inflationary headwinds. Bitcoin dips below $109,000 as economic data dampens sentiment. crypto markets experienced a notable pullback, with the total market capitalization shrinking by 3.5% over the last 24 hours, settling around $3.83 trillion. This broader decline was largely attributed to prevailing macroeconomic concerns that continue to pressure risk assets. Bitcoin (BTC) saw a significant drop of 3.8%, trading at $108,383, underperforming the wider crypto market. Other major cryptocurrencies also felt the pressure. Ethereum (ETH) fell 4.5% to $4,340. XRP declined 5.3% to $2.84, and BNB slipped 1.3% to $860.26. Solana (SOL), despite a strong previous week, edged down 1.3% to $209.17. The market's reaction was particularly sharp following the release of key U.S. inflation data. The core PCE price index, a critical inflation gauge closely monitored by the Federal Reserve, rose 2.9% year-over-year, slightly exceeding expectations. Monthly price increases also showed a 0.2% rise from July. This persistent inflation, coupled with a 0.5% increase in consumer spending for July, the strongest gain in 4 months, suggests that the Federal Reserve may adopt a more cautious stance heading into its September meeting. While some analysts still anticipate potential rate cuts, the sticky inflation data could alter this outlook. This economic backdrop led to significant liquidations across leveraged positions, with approximately $543 million in positions being unwound on Friday. Ethereum traders bore the brunt of this, with $183 million liquidated, followed by Bitcoin at $131 million and Solana at $44 million. Meanwhile, on the institutional front, spot Ethereum ETFs saw net inflows of over $39 million on Thursday, August 28, bringing their total net assets to $29.5 billion. Bitcoin ETFs also continued to attract capital, adding $179 million and raising their total holdings to $145 billion. Over the course of the week, ETH ETFs recorded $1.25 billion in net inflows, while BTC ETFs brought in $567.35 million, indicating continued institutional appetite despite the market's volatility. Adding to the market's complexity, 2 new Bitcoin ecosystem tokens debuted this week with mixed results. BitLayer, which aims to enhance Bitcoin's capabilities using BitVM, has already seen a decline of over 30%. In contrast, Hemi, a token that merges Bitcoin's security with Ethereum-like smart contract functionality, experienced a significant jump of nearly 28% upon its launch. These developments highlight the ongoing innovation within the Bitcoin ecosystem, even as broader market sentiment is influenced by macroeconomic factors. As inflation data paints a complex picture, the market is reacting strongly. Stay with us as we explore the massive profits long-term Bitcoin holders are realizing and what it means for the cycle. Record profits. Bitcoin long-term holders lock in $260 billion in second-highest earning cycle. Bitcoin's long-term holders have achieved a remarkable feat, realizing approximately 2.37 million BTC, valued at around $260.7 billion in profits during the current 2024-2025 cycle. This performance marks it as the second most profitable cycle in Bitcoin's history, surpassing all previous cycles except for the 2016-2017 period in terms of profit realization for these seasoned investors. Data from Glassnode reveals that the average accumulation price for these long-term holders stands at approximately $37,000, a level that is about 70% below the current cycle's peak. Historically, such accumulation prices have often coincided with bear market lows, suggesting a strategic entry for these investors. However, these substantial realized profits are also being interpreted by analysts as a potential indicator that Bitcoin might be entering the latter stages of its current market cycle. On-chain data further supports this view, showing a notable transfer of roughly 50,000 BTC from long-term holders to short-term holders. This shift in holdings can contribute to sideways price action as the market digests these movements. Some market observers are anticipating a possible market correction in the coming weeks. They point to the limited impact of recent bullish news on prices and the historically weaker performance of Bitcoin during the month of September as reasons for caution. There is growing speculation among investors that they might be strategically selling their holdings in anticipation of a cycle peak, potentially occurring in October or November of 2025. The aim appears to be to secure profits above the $100,000 mark. While this cycle is showing signs of extending longer than previous ones, with a flattening uptrend slope, the expectation of a sharp price movement remains for the third quarter of 2025. This prolonged cycle suggests a different pattern compared to the more rapid boom and bust cycles of the past, potentially indicating a more mature market. The current cycle's characteristics, including the significant profit realization by long-term holders and the potential for late-stage indicators, present a complex outlook. While the substantial gains achieved by early investors are a testament to Bitcoin's growth, they also raise questions about sustainability and potential future price movements. The market is keenly watching whether these realized profits will lead to a significant correction, or if the underlying demand drivers can sustain the upward momentum. Witnessing these massive gains from long-term holders is incredible. Now, let's shift focus to a groundbreaking approach to wealth preservation that could change everything. Jack Mallers champions Bitcoin as the ultimate wealth preservation tool. In a significant development for the digital asset space, Jack Mallers, the CEO of Strike, is leading a charge to redefine wealth preservation through the strategic adoption and advocacy of Bitcoin. Mallers presents Bitcoin not merely as an investment or a speculative asset, but as a fundamental tool for safeguarding and growing wealth in an era of increasing economic uncertainty and currency debasement. His vision extends beyond simple hodling, proposing a paradigm shift in how individuals and institutions approach financial security and sovereignty. Mallers' advocacy is rooted in a deep understanding of Bitcoin's core properties: its decentralized nature, its fixed and predictable supply capped at 21 million coins, and its robust security powered by a global network of miners. He argues that in a world where traditional financial systems are susceptible to inflation, political interference, and censorship, Bitcoin offers an unparalleled level of resilience and predictability. This makes it an ideal asset for long-term wealth preservation, akin to digital gold, but with the added benefits of global accessibility and transferability. The strategy involves leveraging Bitcoin's capabilities not just for storage, but for active participation in a new financial order. Mallers has been instrumental in developing and promoting technologies that integrate Bitcoin into everyday financial activities, making it easier for individuals to earn, save, and transact in Bitcoin. This includes advocating for policies and infrastructure that support Bitcoin adoption, such as favorable regulatory frameworks and the development of user-friendly applications. His work with Strike, for instance, has focused on creating payment networks that bypass traditional intermediaries, offering faster, cheaper, and more efficient cross-border transactions denominated in Bitcoin. Furthermore, Mallers emphasizes the importance of financial education and empowering individuals with the knowledge to understand and utilize Bitcoin effectively. He contends that by embracing Bitcoin, people can regain control over their financial destinies, protect themselves from the erosive effects of inflation, and participate in a global financial system that is more open, equitable, and transparent. This forward-thinking approach positions Bitcoin as a critical component of modern wealth management and a key enabler of financial freedom. Mallers' vision is gaining traction, resonating with a growing number of investors, entrepreneurs, and policymakers who are seeking alternatives to the existing financial paradigms. His consistent message and proactive development of Bitcoin-native solutions are contributing to a broader narrative that elevates Bitcoin from a niche digital currency to a foundational element of future global finance. Jack Mallers is truly forging a new path for wealth preservation. Now, let's quickly recap the biggest stories of the day and hit you with the call to action. And that's a wrap on today's essential crypto updates. We saw Bitcoin's rally cool as ETF demand slowed, potentially setting the stage for Q4 liquidity. Inflation data hit hard, pushing Bitcoin under $109,000, and long-term holders have realized a staggering $260 billion in profits, signaling a potential late-stage market. Plus, Jack Mallers is redefining wealth preservation with Bitcoin as the ultimate tool. If you found this information valuable, do yourself a favor and smash that like button, subscribe to Bitcoin Bulletin for more market-moving insights, and ring that notification bell so you're always ahead of the curve. Don't forget to follow us on all social media platforms to stay connected 24/7. We'll see you in the next one.